This weekly news flash is sponsored by Partners Advantage Insurance Services. Experience the advantage of a true wholesale partner. For more information, visit partnersadvantage.com. The recent recession led many younger baby boomers to begin thinking about retirement and seek guaranteed retirement income, according to a recent study by Allianz Life Insurance Company of America. Nearly 84% of the respondents said the safety of their money was more important to them than it was several years ago. Factors contributing to this shift include the shortage of defined benefit programs, several years without cost of living increases for recipients of Social Security, and recent volatility in the stock market. In addition, the study found that a growing number of younger Americans are considering annuities as part of their investment portfolios. Yet the 41% of younger boomers had not researched annuities in the last 10 years. 80% of younger boomers who own annuities said they are happy with their purchase, while respondents in this age group ranked annuities highest in satisfaction among a range of other financial products. Just 19% of respondents said they currently work with a financial professional, yet 41% of that group said they were interested in hiring one. 22% said they felt overwhelmed at the prospect of providing for themselves and their family in retirement. 29% of those surveyed said they understand that working with a financial professional could help them deal with the threat of outliving their retirement assets. The study notes that this trend offers opportunities for advisors who reach out to those in their mid to late 40s. With more than 10% of the nation's insurance workforce, California has the most insurance professionals of any state, according to a new Insurance Information Institute report. In 2008, property and casualty insurers provided more than 297,431 jobs to Californians, accounting for $20.7 billion in compensation. Additionally, the sector accounted for $30.1 billion of California's 2007 gross state product. According to the report, that is approximately 2% of the state's economy. The state collected over $2 billion in insurers' premium taxes in 2009, twice the amount of any other state. Life insurance claims and benefits payouts totaled $41.8 billion, while property and casualty claims payouts amounted to $28.7 billion. Republican legislators plan to block certain IRS funding in the next Congress, which could block several provisions of the health care law from implementation. While many Republican candidates for the November 2nd election are running on the platform of repeal and replace, others realize this is not a viable strategy while Obama is president. Instead, they are planning a new strategy to block necessary funding. If Republicans are successful in impeding IRS funding during the next Congress, several provisions of the Patient Protection and Affordable Care Act could be halted. The IRS will need between $5 billion and $10 billion over the next decade to administer subsidies for qualifying people to purchase health coverage, according to the Congressional Budget Office. In addition, the Treasury Department says that if funds are blocked, the IRS won't be able to provide small business health insurance tax credits. Federal officials failed to recognize warning signs that the mortgage industry was skipping steps in the foreclosure process, according to Sheila Bair, chairman of the FDIC. The federal government and the financial industry should have investigated the ways banks were reducing their costs in foreclosing homes, said Bair. Federal Reserve Chairman Ben Bernanke said regulators will soon issue the first formal federal assessment of the foreclosure crisis. Quote, "We are looking intensively at firms' policies, procedures, and internal controls related to foreclosures and seeking to determine whether systematic weaknesses are leading to improper foreclosures. We take violations of proper procedures seriously," unquote, said Bernanke. In addition, regulators are investigating the ways in which foreclosure issues could be affecting the overall real estate market and potential impacts on banks and other financial institutions. According to Bair, the majority of affected banks are not regulated by the FDIC, which oversees smaller community institutions. For more on the industry, visit producersweb.com.